Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media, generally related to three different topics: wealth building, commodities, and or financial wealth building topics. So we're going to dive in here, take a look. I'm going to interject my financial opinions as we go. So let's see what people are sharing today. If you want to follow me at @finding_finance, and if you want to join our community, I dive a lot deeper into these topics on finding-value.com. I also dive into what I think are good entry points for myself, and I share those entry points with everyone in the community of what I think looks good, and I show you guys what I am buying real time. You can see exactly what I'm doing. We do have a coupon code going on that's still active. Mayday, MAYDAY, one word, is the coupon code if you'd like some savings. Bigger savings on the yearly membership versus the monthly membership. So coming in, the dividend dominator. So John makes $75,000 a year before taxes. How much should John spend on a car payment? I read this and I've seen these things before with these questions like this. My answer is, why is John even thinking about buying a car and having a car payment? Like, if you're making, when I first started working, my question wasn't how much should John spend on a car payment. I did not even have that mindset. My mindset was, I want to save as much money as possible in my 20s and in my early 30s because I could compound it later in life when I got into my 40s and 50s. My the question I asked was, it was not how much should Andy spend on a car payment. That's the wrong question. The answer is, how little can I spend in my life while still living a full life? That is the question I asked when I was in my 20s and 30s. Do I need an expensive car? No. I bought a POS, guys. I drove a very cheap car all through my 20s. In fact, I'm still driving that car today. I spent on a brand new car in my, what was it, 25, 24, 25 years old. I spent $7,700. And my parents gave me a loan for a part of it because they wouldn't loan me like $2,000 or $3,000. So I put $5,000 down or so, and I was gonna get a loan for like 2 or 3 thousand bucks. And my parents were like, I was like, could I borrow some money? Because I had just graduated college and I had purchased a car at that time. They weren't going to loan me that small of amount of money. So that's what I did. And then the question I was trying to solve was, how could I live my 20s to the fullest and save the most amount of money simultaneously? A lot of people say, well, put together a budget. We should be budgeting. We should be tracking all of our expenses. I didn't track anything. This is what my question was. Does this thing that I am buying provide enough value either from an entertainment perspective or from an experience perspective that is worth the cost of this thing? And what occurs is that you can do a lot of stuff in your 20s when you've got lots of friends and you have a lot of things to do that cost literally nothing. So I did a lot of things that were really cheap, but I didn't really miss out on the experiences. You don't need to spend $20 to park your car downtown. Park it a couple miles out of downtown and go walk downtown. You get a better experience walking with your friends and you have more fun doing it. And if it's warm out, who cares? Maybe get a friend that lives downtown and you can park at their apartment. You can do all sorts of things to really avoid a lot of the costs and get all the experiences. You don't need to go buy a drink downtown for a bunch of money. Maybe do a little bit of pregame and before you go out if that's what you want to do. Investment Cage. It says at least once a week, I think about this post. It says, "Do you have FU money?" And what he considers to be FU money is basically 3 to 6 months worth of living expenses saved in a bank account. That way, if it's not working out at your job, you can tell your boss to go F themselves because you have FU money. That is not FU money, guys. I mean, maybe I have a distorted view. I don't know, but having 3 to 6 months worth of living expenses is not FU money. FU money and what I am trying to build and what I think of FU money, I think of FU money that there is nothing in this life that can touch me financially. That is FU money. FU money is when I don't have to work and I still get paid 100 grand a year. That is FU money. FU money is not a 3 to 6 month savings account. Come on, guys. You got to aim higher than that. So when I look at it, FU money is like I don't have to work and all my living expenses are covered. That is FU money. That is saying I don't need a job. I don't even have to go to work. I don't. It's not telling your boss, oh, I'm going to tell my boss to go F them. It's like, guys, that's like childish. How do you get out of the rat race in its entirety? That is FU money, baby. And that is what I am trying to teach people. I'm teaching you like the freedom, the financial freedom type money, not just, oh, I can go say F you to your boss. That's whatever. Finance guy. Oh, and one other thing here. When you get enough money and you start saving and investing and earning more and more money, all I'm going to tell you is at some point, you're going to look at things differently. Hey, look, I don't need to evaluate this job of A versus B solely based off of how much money it's paying me. You might take certain jobs completely different and out of, let's say, what you've been doing before. You could try totally different paths and avenues of making money because you have that cushion. And basically, what I'm going to tell you is when you have a certain amount of money and you're not living in a scarcity mode, you're going to change your entire life and look at your life differently. You're going to be a different person. And some people, they can't handle being that different. You give them money, they're going to go do drugs and all other stuff. Like they can't handle that wealth or that money. Other people will be changed for the better. They're going to help other people. They're going to find maybe more meaning in their life, whatever it is. So finance guy says, at a barbecue talking to a guy about home ownership. He's 37 with 2 kids and lives not far from me. He's got a beautiful home and a great job. A few years ago, he purchased a house for 460,000 and now it's valued for 800,000. His problem is he wants to move but has a 2.5% interest rate and doesn't want to sell his house. The golden handcuffs of home ownership that's rarely talked about. I don't understand what this guy is actually saying here. Is he saying that because he purchased and he gained like $340,000 in equity in his house and now has a mortgage payment that is like half the cost of renting, that is golden handcuffs and it's rarely talked about in home ownership? That's like saying I married the best girl ever who is super easy to live with, and I don't want to leave this person to go somewhere else. And they're like, oh, that's the golden handcuffs. I'm like, that's great. Like that's like winning in life. So I don't know what he's talking about here. Like if you bought a house and it went up that amount, and you've got all this equity in it, and then you've got a really small mortgage payment, that's kind of like winning. I mean, that's what winning feels like. To me, it does. I did the same thing. Actually, it's very similar to this guy's situation here. I'm a little bit older and I do have kids, but I purchased cheaper and my value is up probably just a little bit. It's a little less than that, but and I have a 2.75% interest rate. If I were to purchase another house, I wouldn't sell this house. The mortgage is it's too little. Like I'm not really paying anything for a mortgage payment. So I mean, my mortgage payment's less than my living expenses in terms of like food costs and stuff. I think it's a great situation to be in. If that is what golden handcuffs feels like, then handcuff me up, baby. I'm gonna go get another couple of handcuffs, I guess. Maybe I should go get a couple more homes. And if interest rates were to fall back down, that'd be a great situation to be in. I know a lot of people who want to buy homes that wish they were in that situation. They wish it were, they were in that situation. Yeah, I don't know. So Mr. Budget Bill, he says, my friend is debating whether to accept a new job opportunity. Let me explain. Her current job is very stressful, dealing with clients all day in the banking industry. She has to work in the office downtown Dallas Monday through Friday. She's a single mother with one child. She currently makes $125,000 with a 10% bonus. The new job opportunity makes a little bit less, about $105,000 with a 10% bonus. Working with less clients, which potentially means less stress, 100% full-time work from home will be huge. There's other benefits are similar. Do you think she should take the new job? I'll tell you this, guys. I haven't worked at a 9 to 5 since September of 2023. And it is a huge hassle to drive into work and to drive back from work. And I lived about 13, I think it was 13 miles away from where I worked. It just sucks a lot of time out of your day, traveling 13 miles there, say 20 minutes there and 20 minutes back. So that's 40 minutes out of your day that you're driving there and driving back. I didn't get a paid lunch, so my lunch was not paid. I was salary, but technically I was supposed to be there for 8.5 hours. So that was another half hour to 40-minute drain going on there. And at work, you're there for 8 hours. So add it all up. You've got 8.5 hours plus the 40 minutes driving there and back. That's 9 hours out of your day of doing something that you're going to get paid for. So it depends on what you value. If you've got a bunch of money, then you got dividends and investments rolling in, maybe 105K is great, and you can work from home, perfect. I think it's worth the benefits. You'll probably eat healthier and sleep a little bit longer. I think it's worth it, but some people, they might want the money. Gold and silver led the FICC flows this past week. Very uncommon, very global. So this is Bank of America. It says FICC inflows to gold, commodities, HY bonds, and money market funds. The gold and silver getting a bunch. Commodities getting a bunch, and then less so in emerging market debt, tips, bank loans, corporate IG, government treasuries. Like that's where it's coming from. There's not a ton of money going there. Coming down, the psychology of money. A genius who loses control of their emotions can be a financial disaster. Yeah, I think anyone who loses control of their emotions will be a disaster. Breaking, the market is now pricing in just one interest rate cut for the entire 2024, according to Bloomberg. Two cuts being placed 10 days ago when April CPI inflation came in at 3.4%. This comes as US PMI data on Thursday showed inflation remains sticky. Since January, a total of 5 interest rate cuts have been priced out of the market expectations. On Wednesday, Goldman Sachs CEO David Solomon said he expects 0 cuts this year. Higher for even longer is what they said. So we're pushing these rate cuts out into the future, and the yield curve could stay inverted for longer. When I go and I do my daily updates, I talk about the 2-year yield. And we broke to the downside, and the market was anticipating potential rate cuts probably later 2024 is what it was pricing in. Then we saw a large uptick in the 2-year yield, and I think that is what is basically coming in with the market is now pricing in just one interest rate cut for the entire of 2024, and some people are saying that we may not even get any. And it's the market pricing in 0 rate cuts in the future on the 2-year yield. So yeah, that makes sense. CPI is doing its thing, the consumer price index, and this is the gathering speed on the runway. Takeoff, approach sphere, and then firing rockets and setting course for the moon in terms of consumer price index. And that's also a very manipulated number. The consumer price index has substitutions, hedonic adjustments. They can do whatever they want to this number, and it is still in launch mode. SRS Rocker report says, unfortunately, AI will become the world's biggest boondoggle as it devours a massive amount of energy. As the world heads over the energy cliff, the ability to maintain data centers and AI will get into serious trouble. It says Elon warns AI will do everything better than you, make employment obsolete. So in that type of scenario, guys, and kind of my views around it is, let's say AI isn't as successful as the desired outcome. So you invest in undervalued assets and commodities, and life kind of goes on normally like we've got today. But let's say AI is unbelievably successful. So let's say that companies become ever more successful at going from kind of the design phase into manufacturing, and they shrink all of that down, where we can build these just incredible designs um, through our manufacturing facilities. So when you look at that, what happens to basically the supply chain? AI is going to put immense pressure in two areas, in my opinion. It's going to put immense pressure on energy and immense pressure on commodities. Because all these things are, a business is more or less a combination of energy and commodities. They create a design and then manufacture that design to a final product. If AI makes that even more efficient, well, wouldn't that mean it's just going to increase our energy consumption and commodity consumption? Yes, I think so. So if people aren't even going to work and we get that efficient I can't imagine what the demand for commodities will be and the demand for energy. Energy to power AI and energy to power our manufacturing facilities with even more commodities if we become more efficient at producing these things. Basically creating a design and then manufacturing it. But maybe AI will figure out an energy source. Maybe. So Oliver Grab says, this is the main reason why BHP is attempting to take over Anglo. What they say is, over the next 30 years, the world will need 2 times as much copper as the past 30 years. And that's your exponential growth. So I, I don't know if we can produce that amount. They're fighting. What's going to happen is these big boys are going to all start to fight over the remaining assets that the world has. Any good asset's going to get a really good number. And they're going to fight over what's left. And what they're going to do is they're going to milk these mines for whatever they got at a very high cost of what copper's coming. Because copper's not going to stay around $4, $5 a pound. It's going to go way up. We'll probably see $10, $15, $20 a pound, somewhere in there. And then they're just going to milk these mines for whatever they got left. Just milk them. So finance guy, and another one from him, he says, my car yesterday, the dealership wanted $250 for a new battery and replacement. AutoZone wanted $300 for a new battery and replacement. Then I watched a YouTube video and learned how to replace the battery myself. Went to the dealership and bought the battery for $180, went home and changed it. I saved $70 plus learning something new. Well, what I would say is don't forget to look at Walmart. They've got some batteries there, and it might be cheaper than $180. Changing your battery is incredibly easy. Incredibly easy. And some of the things that I tell, I was watching somebody who was complaining about their car and they had to get it fixed. They spent like $2,500 fixing their car. There was some damage to it. I think somebody tried to break in their car, and I think they broke in and like crashed it, something like that, whatever it is. But it was like $2,500, and I'm like, dude, you just need a new half shaft on the front of the car. You need a new lower control arm and a couple other things that you need. I'm like, I could fix that car for like way less than that. So when I look at all this stuff and I look at how these people excited that he changed his battery in his car, I'm like, I don't know how people live like this. Like cars are really expensive if you pay someone else to fix things. I fix everything myself. I just do it. Car battery, that's like a joke. That's super easy. Now, something that might be like a pain in the butt, if you're doing like a head gasket, that's a pain in the butt. If you're doing clutch on a car, you're going to have to take the transmission off. And if you're driving a manual transmission, yeah, that's a pain in the butt. But it's not hard. It just takes a lot of effort and some time. But I'm surprised that people can even afford to get all their stuff worked on. That's a lot of the savings that I got out of my cars is I do all the work on my cars myself. Northstar says gold versus the stock market. Says there's no confirmed precious metals bull era until we cross the zero point 0.5 level. All of this is just a blip before further precious metals declines or just the warm up act. Think about that. So, like all potentially bullish roadmaps, there's no confirmation of the upward trend until the resistance level indicated are crossed. But let's be honest, guys. Every time we get to these levels and start to turn, we're going higher. So, in my opinion, we're going to go higher. And that is driven by the real estate cycle and further evidence of the chart patterns in commodities. So I don't see how gold would necessarily fail on a long-term basis with all of the other sectors that I watch putting in these big bottoming patterns. So more than likely, we are bottoming here and going to work our way on up. That's my viewpoint. Looks pretty good. The more you learn, the more you earn. I like that one. Now here's one. It says your consumer discretionary index just went out at a new 10-year lows this week relative to the S&P 500. I'm sure it's fine. And maybe this is that slowdown that we could potentially be getting here. Money's rotating from basically the wants that people have to the needs. I've said that before, that this is going to rotate from wants to needs, and the technology sector is probably going to bear the brunt of this slowdown. So we could get a slowdown, definitely possible, but we'll have to monitor it and watch. And this is one of those indications that we could be slowing down is consumer discretionary versus S&P 500. But then you're going to see all the commodities against S&P 500 start to turn too. So consumer discretionary is going to be probably one of the weakest sectors. And S&P 500 is going to get its butt kicked by energy, precious metals here, and other commodities. That's the way I see it. Another one says there is more than one method by which an investor, if sufficiently skilled, can over the years make some money, occasionally even really worthwhile money, says Phil Fisher. He says you have to invest the way that's comfortable for you. I'm in the camp that you get in early, you are patient, you wait for all this to kind of unfold into a different market condition, and then you make monster amounts of money. That's where I'm at. But it requires patience. It requires to do things different than everyone else and to buy cheap assets. And all of the strategies that I developed, the three pillars, market conditions, ratios, and technical analysis, aid me in identifying undervalued opportunities. They aid me in taking a contrarian viewpoint and making sure that I'm right, to take an early entry point. That's the strategy that I've developed, and that's what I teach on the website in our community. So that's the way that I invest that's comfortable for me, because I don't want to make a 20 or 30% gain. I'm going for multi-baggers. I'm going for it. So uranium priced in gold, inflation adjusted to today's gold price, uranium would need to exceed $490 a pound. Wait a minute. We're talking about $500 a pound uranium here when adjusted for gold. So I've got a hat here. It says uranium 500 because this is what I use to kind of price the peaks. And I'll show you that hat here soon. And here's some more data, charts on crude net positioning of non-commercial accounts, managed money. You can see that net length is really low here. What does that mean? It means no one's in it. The length of the market, all the participants are leaving the market. So we are at a really good opportunity time here for a potential move higher because no one's in it. When no one's in it, that's a good thing. It says the single greatest edge an investor can have is a long-term orientation because no one else is adopting the long-term orientation. You can wait and have the market condition fully play out. So if you buy cheap assets and you have a long-term orientation, that is the investor's greatest edge. Why is that? Because no one else wants to be patient and do long-term investing. So your edge is what everyone else doesn't want to do. You have to do what other people don't do. You have to buy something that no one likes. You have to have a long-term orientation that most people will sell in 4, 5, 6 weeks. And the advantage comes from doing opposite of what everyone else is doing. So if you want to be a multimillionaire, I can tell you how to do it. You take a long-term orientation, like he said right here. You buy undervalued assets when nobody wants it, and then you wait. It's patience. You wait a long time. And then if you can identify what's cheap, you buy what's cheap and wait a long time, you will just so happen to make a lot of money. But it takes time. And nobody wants to take time. They think that it's a lost opportunity. That, making a 20 bagger in 5 years, oh wow, that's such a bad return, isn't it? No, it's absolutely fantastic. Absolutely fantastic. In fact, those returns are better than some of the best investors in the world. They are. We've got URA. It says for the first time in a decade, we have successful retest at the big cup and handle ceiling. Now, I don't consider this a cup and handle. Oh, well, this is a cup and handle here. Yeah, cup and handle here because we had a move up from 2020 up into it. That is a cup and handle there. And we're starting to break and do a retest for URA. Looks really good. Now, I don't know if this is a cup and handle because this is kind of a big bottoming pattern. But the cup and handle here is definitely a cup and handle for sure. But yeah, we've got this U kind of shaped bottom here going on. And this is the zoomed in area here, which is definitely right at support. So we'll see if we hold here and move on up. I'm very bullish in uranium, extremely bullish. And I think it's a great opportunity for people if you want to look at it. I thought this chart was awesome, guys. I love charts that look like this, that squeeze up into corners. It says, finally, what every precious metals investor wants to see, a silver to gold ratio breakout on the weekly time frame. This is usually a very bullish signal for the PM markets. Usually it is a bullish signal. I says got silver and silver's breaking out against gold here. So this is SLV divided by GLD. And what we can see is we can kind of see this is coming down and created that capitulation bottom in 2020. It rocketed higher, small selling pressure back down, rocketed higher, small selling pressure down, and we've got a 3-hump consolidation here, right? And we've just broken out. Looks absolutely great. Love it. Absolutely love it. But that's what we've got. That's where we're going to end it, guys. So give me a thumb up for the content. Subscribe to the channel. Here's the Uranium 500, guys. Uranium 500. But that's what we've got for today. And yeah, that's all I've got. So we'll catch you later. This is Finding Value.